Hey everyone, welcome back to Your Money, Your Life podcast. We're on episode 308, the final podcast of the year. Wanted to make sure I recorded it before we get into the holidays, Christmas, family, friends, all those good things. So we are recording it a little bit early and it may drop a little bit early, but that doesn't change what we do. Make sure you like, subscribe, 5-star rate, and review this podcast to everyone that you are know. Share it with everyone. Listen to it during the holidays. That's a better idea. Around the Christmas tree, just throw this on. We can do this, and we do this every week. So let's jump into it. There's going to be a little bit less news because, again, we're recording early. So there's not much that has changed. But let's look at our typical stuff for the year. Let's look at our typical information, starting with our chart for the week, and we can actually get into what happened year to date. I mean, it's going to be another week of trading. We have a shortened trading week. We have a half day and a day where the market is closed. Obviously, Christmas. And we have 1 or 2 half day trading days as well. But if you take a look year to date, over 16%. That's pretty impressive. Again, we saw 2023, 2024, now 2025, strong years of investing. 2023, 24, and 25. If you see the chart, we just keep going to higher highs, folks. And again, the people that would get scared, and there's less and less people now that they're more inundated with understanding of what the market is, that would be like, oh, we're going to go to zero, or the a bear market's going to take us to crash. Not going to happen. I've always said that, and I've always been right about that. The market is never going to zero, not anytime soon, unless the world ends, which there's going to be different issues than just your funds if the world ends, right? And so, again, 2023 strong, 2024 strong, 2025 also strong, and we're still not done. We still have a week or so left of trading. We got Wednesday the 31st, if I'm not mistaken. So still some time to go, but that's pretty much a synopsis of what we'll see, at least for the end of the Your Money Life podcast, talking about it. In 2025, our next podcast episode, excuse me, in 2026, we'll talk about what we think the outlook is for 2026. But let's just review this year. Again, another strong year, driven mainly just by AI. The AI trade tech did really well. We can even dig into QQQ and other tech barometers that closely follow the Nasdaq and big tech trading year to date. QQQ up 21%, pretty much. A strong year for tech and all the big tech names. Most of the big tech names, I should say. Some didn't trade as well as others. Let's take a look at the Dow Jones year to date, 12%. So a little bit lagging, but of course, it's a little bit more blue chip, slower growing, stalwart companies in the Dow versus in the high flying tech sector, but still a positive year. And a positive 5 years, really strong. So we're seeing, again, that trade has continued to go well. Investing long term has continued to be well. And that's what we have always said. We've gone through the pandemic pullback. We've gone through 2022 long bear market, which was like a year-long bear market, and we still made it on the other side, like we've always said. This year we saw that April, May pullback correction, still made it to the other side, like we've always said. Now, 2026, we'll see. We have to still crunch some numbers and do some analysis about where we'll go in 2026. There, of course, will be corrections, pullbacks at some point in the market. Pinpointing that is really, really difficult for anyone in the world to do, but there are going to be those things. So we'll talk about that as well. But again, we're seeing strong performances by the market so far. And that's, again, a good thing for investors and a good thing for long term investors, particularly. New Street Review, again, we've had just continue to grow. We're well over the asset range that we wanted for this year, and continue to plow through adding new clients is another strong client addition year, client household year, and addition of assets that we manage again. So props to the people that refer. There's a lot of great new clients we have that continue to refer people. Props to what we're doing with social media. We'll continue to do that and build that in 2026, as we talked about last podcast. So we'll go through that a little bit more at the end. But let's jump into a little bit of a news update. I don't have much because, again, it's a shortened week that I'm recording early. But we talked about this last week. Paramount's bid for WBD, Warner Bros. Discovery. Now they have a actual guarantee from Larry Ellison. So Larry Ellison has now put in his irrevocable personal guarantee. They're pretty much saying they need financing. And if Larry Ellison, who's a multi-billionaire, one of the top 5 to 10, wealthiest people in the world, is now personally guaranteeing his wealth to this deal, then Warner Bros. Discovery feels a little bit more assured that they will potentially really, really look at this deal over the Netflix deal. So in the article, it says that the WBD's board has been looking for confirmation that Ellison, father of the new Paramount chief David Ellison, was fully committed to the deal. Meanwhile, Netflix is forging ahead with its $72 billion bid for WBD. The streaming giant refinanced part of its $59 billion bridge loan to take it took out to bolster its offer. So again, people are just pulling together big amounts of capital and financing through equity, through loans to try to buy WBD and those assets and the license and all that comes with the content of WB Warner Bros. Discovery. So most people or both sides still very entrenched and want that asset. And now you have a personal guarantee. So we'll see if that heats it up. I still think Netflix again wins this bid. But it looks like Warner Bros. Discovery's board wants Netflix to win this bid so far. And we'll see where this lands because it's still got a little bit more to go. Let's talk more investing. SoftBank is sprinting to fund 22.5 billion OpenAI deal. So SoftBank is looking to scramble to fill a 22.5 billion funding commitment to OpenAI by the end of the year. This is reported by Reuters. The Japanese conglomerate is reportedly deploying various strategies, including margin loans and selling valuable stakes in Nvidia and T-Mobile to help finance the ChatGPT maker. The move comes as OpenAI eyes another record-breaking funding round, potentially worth 100 billion. So the SoftBank CEO is also gearing up for PayPay's market debut, expected earlier next year and projected to reach over 20 billion. So they're just trying to fund their commitment to OpenAI and they need cash. People are looking for liquidity end of year. They need cash and liquidity to do so. So they're making some sales in some other areas of their portfolio to fund this commitment to OpenAI. And OpenAI is obviously on the bridge of closing another funding round, potentially worth up to 100 billion in funding, which is incredible. The company is nearing a eye-popping, eye-watering $1 trillion valuation as a private company, which is pretty incredible. Let's watch some numbers. There's some numbers to watch this week as we think about Christmas. The Christmas holiday won't put a stop to steady drip of shutdown delayed economic reports, but Tuesday we'll see a flurry of key releases. This is important, including consumer confidence, durable goods, and the third quarter gross domestic product. Analysts expect that the economy kept growing at an annualized rate of more than 3%. So the analysts think that we kept growing at an annualized rate of more than 3% in the last quarter. Revisions to the report and data for the fourth quarter won't be released until next year. So we will get this data next year. But on Wednesday, meanwhile, we'll have initial jobless claims of the week ended December 20th. So Tuesday, we do get the Bureau of Economic Analysis. They will release its initial estimate of gross domestic product. So that's Tuesday, December 23rd. The Confidence Board will also release its monthly consumer confidence survey. And then on Wednesday, I think Christmas Eve, we get the U.S. Department of Labor will release initial jobless claims for the previous week. So we'll get some data. But again, since the layoff, the shutdown, government shutdown, we've gotten less and less data at an adequate time frame for people to adjust and make those decisions. And now they're saying that they're still releasing stuff slowly, but they're backed up. And so that's not good, again, for investors, for people that rely on this data to make decisions. But we're getting it. We're getting some slowly. And so that's, I guess, the most important part. And there are some special ones to watch this week as we close out the year and people get into holidays. So that's really important. Another interesting story, NVIDIA is aiming to begin its H200 chip shipments to China by mid-February. Remember, this was not allowed at some point to sell the chips to China, but now our administration has allowed NVIDIA to sell the chips to China. NVIDIA has told Chinese clients it aims to start shipping its second most powerful AI chips to China before the Lunar New Year. And this is in mid-February. There's 3 people familiar with the matter. The U.S. chipmaker plans to fulfill orders from existing stock, with shipments expected to total 5,000 to 10,000 chip modules. NVIDIA also told Chinese clients that it plans to add new production capacity for the chips. So it's a major policy shift. They were not able to, now the administration has allowed them to sell these chips to China. And some people have mixed feelings about that. They don't want China to catch up in this AI race and this technology race. And Nvidia, obviously a US California-based company, has the most powerful chips, this AI technological landscape. So something to note. And they are making those now sales to China. So we'll see how that kind of perks up. That's again a different deal there. So we'll see how that goes. Let's look at the year in review, 2025. What was the trending searches? Did you guys look at this? Google year in review. Gemini was a top search. India versus England. I'm okay. This is worldwide. Can we break this down to the US? I think we can. I think we can. How do we do that, folks? Okay. We're on global. Let's go United States and see what we get. We just refreshed. And so we can now see what's happening in the United States of America. We have some pretty interesting K-pop Demon Hunters. What is that? Is this the year 2025? I'm so lost here. Okay, the one beautiful big bill was the number one news. Government shutdown. We have assassinations and killings. We have tariffs. No king's protest. People. Zohan Mamani was the top searched. Tyler Robinson. Okay. So this is interesting. Sports. Let's look at sports. Athletes. Shadur Sanders, the top search athlete. Terrence Crawford as well, who had a big win over Canelo. Cooper Flag, the number one pick in the NBA. So you got NFL, boxing, and NBA. Cam Scatterbo, New York Giants breakout running back, and then Micah Parsons as well. So it's always fun to look at the year in review. I'm sure you did this with all of your stuff. So look at the year in review and see what has kind of popped up. It's just a good way to see where things are trending or were trending in the past, and if there's anything you suspect in 2025, 2026 as well. So pretty interesting data. I always like to look at that because I think it's really insightful for people to see and for you to see as well. Let's close out the year looking at kind of some things that you could do in the new year, as well as I actually had a good personal finance question that I wanted to go through. It fits the Christmas theme. We may have done this before, but we may not have. But the question is, how much would it cost to buy all the gifts mentioned in the 12 Days of Christmas song? How much would it cost to buy all the gifts mentioned in the 12 Days of Christmas song? I'd say like 300-400 bucks. Oh, I must not know the song very well. The answer is $51,476, up 4.6% from last year. I was way off because I had no clue. I know the song tangentially, but I don't know it very well. And that is $51,000. Wow. Wow. Way off, folks. Well, we'll go into the year with a way off one, but we were pretty good this year. We were pretty good with our calculations, pretty good with our estimations. Again, we said beginning of the year we'd have a green year, but we didn't think it'd be another double digit year. But that seems to be the trend with the way people invest with the capital now, with liquidity and with inflation. Assets also rise when inflation and cost of goods goes up. So you're seeing really strong returns again for people that are investing and doing the right thing for the long term for themselves. So that's what we'll land, folks. We will land here for 2025. We'll again hopefully get this out early. Hopefully you enjoy time with your family and friends because of course we'll be still doing some stuff in the new year. And in the new year, we plan to shake things up, to do a little bit more interactive, intentional content. So please be aware of that and stay tuned and share that with your family and friends. We will talk to you in the new year. Merry Christmas.